Now we're going to be talking about, is the stock market back? And right now the general S&P 500 has gone up 3% in a single day. And a lot of people have been freaking out saying, Carter, the stock market is back. We are entering a bull market, let's go. But I have to tell you that that is not the case, and this is why. Reason number one, if we have a bull market, that would not represent the US economy. And right now, we're kind of not doing the greatest. We have very high inflation. Anytime you have high inflation, we see a tendency to see the general stock market become more volatile, very similar to the 70s, where the 70s did not see a lot of growth, just more consolidation. The second thing, right now we still have very high interest rates, and the Fed even raised them more. And anytime you have high rates, it's always harder to get loans. And anytime it's harder to get loans, we see a slowdown in the US economy, just because it's harder to get a house, it's harder to get a car, and it's just harder to get other things to keep the economy afloat, right? To keep money in the economy, you need lower rates. Now, another reason that I personally don't think we are entering a bull market is because the average recession lasts for about 14 months. And right now, we've technically only been in a recession for right at about 4 weeks. So we technically still have about 13 months of an average recession left. And personally, I think it could last a lot longer. Now, right now, the economy and the market is very similar to kind of what we saw in the 70s, where the US had to spend trillions of dollars on the Vietnam War, and the US right now had to spend trillions on COVID and all these lockdowns. So we got put in debt, which caused high inflation, very similar to the 70s, and on top of that, very high interest rates. The rates in the 70s were off the charts, some as high as 8 to 17% for an average mortgage loan, which is crazy because right now we're at 6%, but slowly creeping up higher and higher. So personally for me, I'm such a long-term investor, it's crazy. Anytime we get some sort of slowdown or sell-off in the general market, for an educated investor and a long-term investor, for me, all these stocks just come out at a massive discount. This is the absolute best time to buy, and the reason why that is because the stat came out and they said for everybody that buys during a stock market recession has a year-to-date or an annual return rate of about 22%, which is crazy. The general S&P 500 grows at 10% per year. So if you are buying in recessions, you're going to be doubling what the general market does. And another fantastic thing, right now there's so much opportunity to buy just general fantastic companies that are super affordable. Companies like Tesla, Apple, and Johnson & Johnson, Home Depot, companies that you and I know are not going to close their doors tomorrow and are still bringing in billions of dollars. They've fallen some as much as 40%. So the long-term outlook for all these stocks are very strong. We've just seen general sell-off just because of the state of the market we're in. So for me, buy as much as you can, hold it, and not even worry about it. Don't look at the short-term volatility, right? The general market has an annual return rate of 10%. And that's through all the ups and downs, bull and bear markets, the recessions and the Great Depressions. You just have to have a long-term mindset and you guys will be successful. And that's kind of what I have, that no matter what market we're in, it's better to have time in the market than try to time the market, but understand that recessions are the best time to time the market, guys. So guys, that is it. I hope you guys enjoyed it. If you did, hit that like button, subscribe to the channel. If you have any questions, ask them down below, and we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.